Hello, this is Brad Harvey with Harvey Investment Management with our first quarter 2026 update. Certainly this quarter had a lot of volatility in it. If you weren't watching the news, we started a little conflict in Iran. Turns out they had some nuclear weapons and we wanted them, and they produce a lot of oil, so it created a lot of turmoil. Before that even started, the US stock market indexes were already starting to sell off, and we had gold that was doing pretty well, but energy was relatively flat. Now we're all the way through the first quarter. Today, the last trading day of the quarter, actually was a pretty solid day across the board for stocks. Even bonds did fairly well today. So let's go ahead and start going through the numbers. The Dow Jones Industrial Average for the quarter was down 3.63%, and the S&P 500 was down 4.69%, and the tech-laden NASDAQ 100 was down 603. Remember, those are the mega cap tech stocks primarily, or the Mag 7. You hear a lot about those names. Moving on, the broad market Russell 3000 index was down 4.24. So pretty bad overall, and within that index, the small cap piece was actually flat. It was up 0.45. Non-US large caps were up 1.17, while non-US small caps, or emerging markets, were up 3.77, certainly on the strong point for the equity indexes. Adding to that, the 10-year Treasury yield actually went up about 20 basis points, ended the quarter at 4.31. That's a 3.5% increase from where we ended last year. The Barclays Aggregate Index, the Long Treasury Index, the Long Zero Treasury Index, all pretty flat for the quarter. And real estate, REITs, for the quarter, pretty flat. The high points, commodities. The broad-based commodity index for the first quarter was up 29.47%. Certainly a very good performer. Gold, while selling off in March, is still up 8.58% for the first quarter, and oil, rounding out the stars, was up 77.4%. Now, I think that's artificial. We don't think that's going to last forever. Interestingly enough, the dollar was actually up a little bit, about 1.5%, and even in that environment, non-US stocks perform better than US stocks overall. That's a bit unusual with our currency increasing. Inflation, while we're at it, we don't have the final numbers for the first quarter, but it looks like it's going to come in somewhere around 2.4% on a year-over-year growth basis, so relatively muted. So what does all of this really mean? Well, certainly we've had a lot of volatility, and anybody who's been invested in the markets, if you didn't have any exposure in energy or commodities, you're kind of crying in your soup, and we get that, because a lot of the other asset classes tended to move together. That's when correlations all come together. That creates stress for me, creates stress for everybody who's an investor, but long-term, remember, this stuff works, and it works very well. So this is Brad Harvey with Harvey Investment Management and our first quarter 2026 update.